All right, let's just get right into it. Welcome to the deep dive. It is Sunday, March 1st, 2026, and well, we have to address the elephant in the room right off the bat.
Yeah, we definitely do. The first price target for LUNC was technically missed.
Exactly. The source material had that very specific window for February, targeting the 0.00015 to 0.00072 range. And looking at the charts this morning, we're just not there.
No, we aren't. But I mean, if you just look at the calendar and say the prediction failed, you're really missing the forest for the trees. The context shifted violently just 7 days ago.
You're talking about the Jane Street news.
Right, the Jane Street news. We saw that aggressive spike up near 0.00005 right after the news broke.
Yeah.
That wasn't just random market noise. That was the market pricing in a brand new variable.
So the mission for today's deep dive is to figure out why that missed price target might actually be more of a delayed fuse. We need to talk about the Terraform bankruptcy administrator suing Jane Street.
We do, because the lawsuit revealed in February changes the entire landscape.
But let me just play devil's advocate for a second here. Companies in crypto sue each other every Tuesday.
Yeah.
Why does this specific lawsuit matter enough to, resurrect a coin that crashed 4 years ago?
Well, because it rewrites the history books. Up until last week, the accepted reality was basically just Duquan built a bad algorithm and it broke.
An organic failure.
Exactly. But this lawsuit alleges it didn't just break, it was pushed. The claim is that Jane Street used confidential information to short the system.
Wait, so we're talking about actual insider trading allegations?
That is the core accusation, yeah. The claim is they took an $85 million position in UST and used inside knowledge of the peg's fragility to withdraw right before the collapse.
Wow. So they didn't just exit a burning building. They might have actually worsened the liquidity death spiral.
Right. The implication is they blocked the exits for everyone else to maximize their profit. If they were manipulating the order flow based on non-public data, they were essentially gaming that frantic minting mechanism while retail got crushed.
It's an incredibly compelling narrative, almost cinematic. But here's my hesitation. Does this actually absolve Terraform? It feels a bit like blaming the wind because your house of cards fell over.
That's a totally valid pushback. And the legal sources are actually quite nuanced on this. They use an analogy I really like, which is, even if Jane Street lit the match, it doesn't erase the fact that a gas-filled room was built in the first place.
Meaning the structural flaws and misrepresentations were there regardless of who struck the match.
Correct. And this is where we have to separate the legal reality from the market reality, especially concerning South Korea. Legally, the courts separate a market attack from fraud.
So the original founders don't just walk free because Jane Street gets sued.
No. If a bridge collapses because a massive truck illegally drives over it, the driver might be liable for damages, but the engineer who built a faulty bridge is still going to jail. It might help with financial mitigation, like sharing the bill, but it doesn't clear the fraud conviction.
But the market doesn't care about legal technicalities.
Exactly. It cares about narrative. And this is the Endgame 3 scenario the sources discuss. If LUNC shifts psychologically from a failed project to a survivor of Wall Street sabotage, that is a massive pivot.
Because markets absolutely love a redemption arc.
They really do. As one source noted, controversial assets trend and volume creates structure. The lawsuit provides the firepower the previous narrative lacked.
So you're saying the missed target in February was basically just a timing issue. The news broke too late to fulfill the prediction in that window.
That is the read, yes. The market manipulation and the timing of the news failing the February target actually sets the stage for Phase 2. The roadmap now points to a March and April window, targeting an entry into the 0.0006 to 0.005 range.
That is a massive jump from where we are today. That implies a complete re-rating of the asset.
It does, but it relies on plausible doubt. You don't need to prove Terra was perfect. You just need enough doubt about the cause of the collapse to justify a mid-cap rotation. Investors look at this and think, if this was a coordinated hit job, maybe the tech wasn't the only problem.
It moves the asset from the trash bin to the high-stakes speculation bin.
Which, in the current liquidity environment, is a huge upgrade.
So, wrapping this up, we missed the March 1st number, but the liquidity ladder is now reinforced by the highest attention news since 2022.
The outcome of the lawsuit almost matters less than the existence of the lawsuit. It breaks the finality of the failure.
It brings to mind that concept of reflexivity mentioned in the notes. If enough people believe Terra was attacked, holding the token becomes ideological. a protest vote against Wall Street rather than just a speculative play. Which leaves you with a really provocative thought to explore. Does a victim narrative actually make an asset stronger than a tech narrative ever could? Thanks for joining us for this deep dive.